Imagine you are not the chief executive of a company, but the leader of a nation responsible for millions of lives, centuries of history, and an economy that suddenly depends on one unexpected miracle. Your country is small, wealthy, orderly, famous for clean design, ancient Vikings and plastic bricks that hurt like hell when stepped on at night, yet something strange appears in your economic spreadsheets. The numbers do not lie, but they feel wrong, almost supernatural, because your national growth no longer comes from ships, factories or exports, but from a single pharmaceutical company. That company did not discover oil, gold, or rare earth minerals, but something far more valuable in the modern world, a way to silence human hunger itself. The year is 2024, the country is Denmark, and the company reshaping its destiny is Novo Nordisk, a quiet insulin maker turned economic giant. Its product is injected weekly by movie stars, tech billionaires, and ordinary neighbors, all chasing the same promise: effortless weight loss without constant hunger. This story is not really about vanity or dieting, but about how one drug grew powerful enough to bend currencies, frighten global industries, and expose a brutal truth about modern civilization. That truth is simple and uncomfortable. Humanity has engineered an environment that makes us sick, then pays endlessly for temporary relief from the consequences. Welcome to the Ozempic Economy, where biology, money, and desperation collide inside the human body and spill outward into global markets. To understand how this happened, we must first understand the battlefield. Not a stock exchange or factory floor, but the space between your stomach and your brain. Picture a supermarket in the middle of the 20th century with smaller aisles, plain packaging, and food that filled stomachs without hijacking minds. Now compare that to today, a glowing maze engineered by psychologists and algorithms to push sugar, salt, and fat directly into your reward system. For decades, humanity ran a massive, uncontrolled experiment flooding the world with ultra-processed, hyper-palatable calories, and the results were devastatingly predictable. We did not merely overeat, we became addicted, conditioned to chase food signals that never truly shut off once they started. More than 1 billion people worldwide now live with obesity, not as a personal failure, but as a structural outcome of their environment. In the United States alone, nearly half of adults qualify as obese, placing enormous strain on healthcare systems and draining hundreds of billions annually. Here lies the dark irony. This suffering fueled a massive economic engine that rewarded food companies, healthcare providers, and fitness brands simultaneously. Corporations profited from making us sick, then profited again from treating the symptoms, creating a perfect loop of consumption and attempted repair. For individuals trapped inside this system, life became a prison defined by constant craving, guilt, and exhaustion. Patients describe it as food noise, a relentless voice in the mind that never stops demanding more, no matter how much you already consumed. For decades, doctors told patients struggling with weight to simply eat less and move more, ignoring the powerful biological machinery screaming inside their bodies every waking hour. This advice failed because it treated obesity as a moral weakness, not as a neurological feedback loop shaped by evolution and exploited by modern food systems. Human biology evolved to survive famine, wiring us to crave calories, hoard energy, and panic when food signals disappear even briefly. For almost all of human history, hunger meant danger, so our brains learned to reward eating with pleasure and urgency. The tragedy is that this ancient survival system now operates inside a world of endless engineered abundance. Our environment changed in 50 years, but our biology is still running software written over hundreds of thousands of years. When willpower fails against this mismatch, shame fills the gap, even though the outcome was structurally inevitable. Economists understand one brutal rule: wherever there is desperation, demand becomes infinite. If someone could silence that internal hunger alarm even temporarily, they would not just create a drug, they would create a license to print money. That prize was not simply weight loss, but control over human attention, vanity, health, and self-perception. Ironically, the scientists who found the switch were not chasing thinness or beauty, but stability and blood sugar. Their target was diabetes, a disease of insulin resistance that quietly destroys bodies over time. The breakthrough came from an unlikely source, a venomous desert lizard that rarely eats yet maintains perfect metabolic balance. The Gila monster could consume enormous meals and then go months without hunger or blood sugar spikes. Its saliva contained a hormone that mimicked a human signal responsible for fullness and insulin regulation. In humans, this signal is called GLP-1, a short-lived chemical whisper released by the gut after eating. Under normal conditions, GLP-1 disappears within minutes, making hunger return quickly. Scientists wondered what would happen if that whisper could be extended into a constant signal. At Novo Nordisk, researchers spent decades refining synthetic versions of this hormone, slowly increasing its power and duration. They believed they were perfecting diabetes treatment, unaware they were unlocking the most lucrative side effect in modern medicine. The first real breakthrough arrived quietly. a daily injection that helped diabetics manage blood sugar while producing modest, almost accidental weight loss. That drug proved the theory worked, but it was inconvenient limited and far from revolutionary in the eyes of the wider public. Then scientists refined the molecule again, extending its life in the bloodstream until a single dose could last an entire week. This new compound changed everything because it did not just manage glucose, it rewired hunger itself. Approved originally for diabetes, the drug slipped into the market under the radar of culture and media. Doctors focused on numbers, lower blood sugar, improved markers, fewer complications. Patients noticed something else entirely. Meals lost their emotional gravity. People reported staring at food they once craved and feeling absolutely nothing. The constant internal chatter demanding snacks, seconds, and sugar simply went silent. Clinical data confirmed the shock patients were losing between 15 and 20% of their body weight. Before this, only invasive surgery could produce results anywhere near that scale. A weekly injection now rivaled stomach stapling without operating rooms or scars. Novo Nordisk realized the implications almost instantly. They were no longer selling diabetes management, they were holding the key to mass appetite suppression. The same drug was repackaged at a slightly higher dose and aimed directly at weight loss. In corporate terms, this was not an upgrade, it was a category creation. Inside minimalist Danish boardrooms, executives watched adoption curves rise faster than any pharmaceutical product in history. Yet even they underestimated the cultural fuse they had just lit. This was not a slow medical rollout, it was about to become a social phenomenon. The moment celebrity culture discovered it, the drug escaped the clinic and entered the bloodstream of the internet. Once social media noticed, restraint vanished and demand exploded faster than any traditional healthcare system could possibly handle. Influencers framed the drug as a miracle, a shortcut, a life hack that bypassed decades of diet failure. Doctors were suddenly overwhelmed by patients who were not sick but desperate to be thinner by summer. Clinics struggled to separate medical necessity from cultural obsession as waiting rooms filled. What Novo Nordisk expected to be a controlled rollout turned into an uncontrolled global experiment. By 2022, mentions of the drug flooded online platforms, racking up billions of views. The medication crossed a psychological line, transforming from treatment into identity. Taking the injection became a status symbol, proof you had access to the future of self-control. Meanwhile, production lagged behind demand, constrained by years-long factory timelines. Sterile pharmaceutical plants cannot be built overnight, no matter how much money you throw at them. Shortages appeared almost immediately, first quietly, then publicly. Pharmacies began rationing supply, forcing difficult decisions about who received doses. Diabetics who depended on the drug suddenly found shelves empty. The free market made its choice clear. Cash-paying customers moved to the front of the line. This created a moral collision between health and vanity playing out in real time. Society rarely confronts ethical dilemmas so visibly or so uncomfortably. Desperation opened the door for a shadow economy to emerge. Compounding pharmacies stepped in, legally bending rules during official shortages. Alternative versions flooded the market, promising the same results without the wait. Regulation struggled to keep pace as the hunger for hunger suppression grew unchecked. As shortages deepened, the shadow market grew bolder, pulling raw chemical ingredients from overseas laboratories with little oversight or accountability. Some clinics sourced compounds from foreign suppliers, trusting paperwork instead of proof, while patients trusted desperation over caution. People began injecting substances never approved for human use, guided by online forums and influencer testimonials. Authorities discovered samples that were mislabeled, diluted, or dangerously substituted with entirely different drugs. In extreme cases, individuals unknowingly injected insulin, risking coma or death in pursuit of weight loss. This chaos revealed how powerful the biological prison of hunger truly is. Faced with endless food noise, rational risk assessment collapses. When biology screams loudly enough, people will gamble their health for silence. Novo Nordisk attempted legal whack-a-mole, suing clinics and issuing warnings, but demand outran enforcement. The company could not stop imitation without stopping the desire that fueled it. While chaos brewed abroad, Denmark experienced a very different consequence, one that unfolded quietly inside its financial system. Novo Nordisk sold most of its product to American consumers, paying in United States dollars. Those dollars flowed back into Denmark and were converted into Danish kroner at an unprecedented scale. Currency markets reacted instantly, pushing the kroner upward. This created a problem no diet drug had ever caused before: a national currency imbalance. Denmark operates a pegged currency system tied closely to the euro. The central bank's mission is simple in theory: keep the exchange rate stable within a narrow band. Massive foreign demand for kroner threatened that stability. A stronger currency sounds good until exports collapse. Suddenly, Danish goods risked becoming too expensive for the rest of Europe. A currency that grows too strong becomes a silent weapon against its own economy. When exchange rates rise, exports suffer, factories slow, and workers feel pressure far from financial headlines. Economists call this phenomenon Dutch disease, when one booming sector quietly suffocates all others. Denmark had studied this in textbooks, but never expected a diet drug to trigger it. The Danish central bank was forced to intervene not to stimulate growth, but to restrain it. To weaken demand for the krona, interest rates were kept lower than those across the rest of Europe. While neighbouring countries raised rates to fight inflation, Denmark deliberately held back. This decision created one of the strangest ripple effects in modern economics. Because how Americans were buying appetite suppressants, Danish homeowners received cheaper mortgages. A pharmaceutical export boom quietly subsidized an entire nation's housing market. In 2023 alone, Novo Nordisk accounted for roughly 2/3 of Denmark's total economic growth. Without it, the national economy would have stagnated. Denmark had effectively become a one-stock economy dependent on a single molecule. This concentration terrified policymakers more than any recession. If demand collapsed, the shock would not be gradual, it would be immediate. A single safety scare or superior competitor could destabilize the entire country. The success story had quietly transformed into a systemic risk, and that risk extended far beyond Denmark's borders. When millions of people eat less, entire industries feel it. Weight loss at scale does not just change bodies, it rewires markets. The first industries to feel the shock were the ones built entirely on excess consumption. When millions of people suddenly feel full, faster grocery baskets get lighter without any conscious budgeting. Retail data revealed a quiet but alarming trend: customers on appetite suppressants were simply buying less food. Snack companies, soda brands, and candy manufacturers saw demand soften almost overnight. Investors understood the implication immediately: fewer calories consumed meant fewer profits extracted. Stock prices of major food corporations wobbled as analysts rewrote long-term forecasts. The fast food industry faced an existential question it had never seriously confronted. What happens to a business model built on constant craving when craving itself is chemically muted? Even airlines began running numbers and discovered unexpected savings. Lighter passengers meant lower fuel costs, turning weight loss into operational efficiency. Alcohol producers noticed similar patterns forming beneath the surface. Many users reported diminished interest in drinking, describing alcohol as strangely unappealing. A modest reduction in alcohol consumption threatened billions in lost revenue. Yet not every industry stood to lose. Fitness shifted from punishment to refinement as newly energized users entered gyms for the first time. Exercises became less about burning guilt and more about shaping strength. Medical device makers faced an unexpected downturn. As bodies grew lighter, joint damage slowed, reducing demand for knee and hip replacements. Capital began reallocating away from treating damage toward optimizing health. The economy was not shrinking, it was mutating. Beneath these shifts lies a darker divide that economics alone cannot smooth over. Right now, access to appetite-suppressing drugs is determined less by medical need and more by wealth. In some countries, the monthly cost rivals rent, placing thinness behind a financial gate. In others, government systems subsidize access, creating stark global inequality. The result is a new class boundary drawn not by income alone but by body composition. Thinness is quietly becoming a luxury good. Those who can afford a chemical silence escape the food noise entirely. Those who cannot remain trapped inside environments engineered to keep them overeating. This reframes obesity from a health issue into a visible marker of poverty. History has flipped once. Fat signaled wealth, now fitness does. Governments face an impossible calculation. Cover the drugs universally and risk bankrupting healthcare systems. Refuse coverage and accept rising chronic disease and inequality. Insurance companies see the same math and hesitate. These drugs do not cure obesity, they manage it temporarily. The moment treatment stops, hunger returns with ferocity. Weight rebounds, cravings spike, and biology reasserts control. This makes the drug subscriptions rather than solutions. Stop paying and the benefits vanish. Humanity has not been healed, it has been leased. This leaves us standing at the edge of a future that feels both miraculous and deeply unstable. For the first time in history, obesity may become technically optional, but only for those who can afford the subscription. Denmark's economic miracle rests on a fragile stack of injections, expectations, and a carefully managed currency peg. A single regulatory shock, medical scare, or superior competitor could unwind years of growth overnight. What looks like national success is in reality concentrated risk disguised as innovation. The global race has already begun, and Denmark is no longer running alone. American pharmaceutical giants are developing stronger drugs that promise faster and deeper weight loss. Each breakthrough threatens to dethrone the original pioneer. For consumers, competition means cheaper access and better outcomes. For Denmark, it means living under a permanent economic countdown clock. Meanwhile, society celebrates the symptom being solved while ignoring the cause that created it. Ultra-processed food remains cheap, addictive, and omnipresent. We are curing obesity chemically while leaving the food environment fundamentally unchanged. It's the economic equivalent of mopping the floor while the faucet continues running. The shareholders cheer as balance sheets improve. Governments breathe easier as short-term healthcare costs stabilize. But the long-term bill is deferred, not erased. Humanity has outsourced self-control to a syringe. Whether this marks liberation or dependency will define the next generation. The Ozempic economy may save the world or quietly bankrupt it one injection at a time.